TGIF Warriors, what a week. What a week. I want to start off by tipping my hat to Steve Volge for his patience, being long gold, sitting through all of this, and finally being rewarded. We talked about once the market, the shorts could no longer defend. And this will be a good guideline for if gold were to negate it, was right here. So all the shorts are squeezed. I think we have to hold above 12.12. The equality again is 12.35. Peter yesterday was talking about 42, I believe, even 46. So I don't think we're done yet. And what a day, what a week in the indexes. So indexes are trying to recover on the S&Ps. Short term, in case these gains don't hold and they try and press it one more time, I think they will. But you had a nice divergence during that panic flush yesterday before the news came out that Trump was going to talk to the Chinese. I don't know if it's going to a G20 meeting or what. NASDAQ has a stronger look to it. Barely made a new low. You know, my targets were 69.20, so you know, pretty close. I didn't sit. I left some money on the table. I got out like an hour earlier. If I would have sat till the next day, it would have been, you know, a lot more money. Anyway, I still think that there's going to be a nice little rally to sell. Maybe it's next week, up around between 38% and halfway back, because this is still a pretty negative week in all the indices. And look at what we held here. See, this was another reason I had a 69 target. Some other guy that I read, I do a lot of intelligence gathering. Not everything I do is, you know, original thought, but it has to tie in with what I'm seeing too. And he was calling this wave 4 of lesser degree. So very interesting how the NASDAQ held here. If we take this out, 5,800, 6,000 is going to happen. So the other reason is I was looking for something similar to what we had at the beginning of the year. This was 800 points. I think this was 9. So I was looking for 8, and 8 from 77 is 69. So we have this symmetry in the corrections, and you know, maybe it's this, and we're going to rally to a new high and then come apart. But I think there's going to be another chance to get short these markets on strength. The Dixie is trying to make a stand at 95, but the weekly is pretty negative. You know, looks like it should go, you know, 1, 2, 3, and maybe we head down towards this 92.80 level before the dollar reasserts itself. We start getting under here, then the dollar bears are going to be right, and this whole thing right here was just a correction of the high at 104. I'm thinking we could have something like this from 92, and this was, you know, 8 points. So this would take us back towards par, and that this is where I think we're going to have the failing rally in the dollar probably later in the year. But I think that we're going to have one more push up. This would not take the euro to parity. It would take the euro back towards, I think this was halfway or 61 back of the whole up move. And down here around 108, 107.8 is 78.6 back. So I'm not in the parity camp. I'm thinking this was real, and that we're, you know, before we're done, you know, 25 to 13 is 12, 18, 12 would be 106. But if we get up here first, 19, you know, take it down to about the 108 level. You know, I hope you had a great week. You know, we had some great calls. Everyone, about the gold and the market crashing. I mean, you go back and play last Thursday's webinar. Plus, the blog was bearish. Equities. Joe went on Bloomberg. He was bearish on equities. And there were some nice scalping ideas. I provided a turnaround Tuesday trade. It was up here for the dollar to peak after cleaning out stops here. Thought we could go to 550 to 5. So here we are. That was my contribution. And really a lot of great guests that made some great calls. Alba made a great call on NASDAQ. I think day after she was talking about she was looking for 300 lower. And that happened. Same with Don Mead. His Sentinels were on sell. Peter was a great interview. We had Kirk, who talked about the oil and gave some ideas in the oil. And, he's been a great guest. He's laid out some, Chesapeake, which, more than doubled from when he was here. So basically his stance in the oil has been pretty spot on. And I was looking at the oil here, and it's very possible that I'd like to see one more low here, one more low, because it's possible what we're getting is, just some type of ABC. Maybe I won't even get one more low. We're back inside the 50. And this could just be, a correction of this advance where I know Grega, I just have to say, there's so many great resources of great analysts and traders here at ForexAnalytix, and the guests are a bonus. But, Greg is talking about in the 80s as well before this ends. You have to do this because FACE is just the tip of the iceberg. And Steve spends a lot of time in the members chat. Maybe you would have been long gold and short S&Ps. Because, you get the nice rundown from him, but you get the interaction and members chat with all the other pros. Blake's in there trading, sharing what he's doing. Amanda's in there sharing what she's doing. Paulie is in there. So, the members chat is one of the greater resources here at ForexAnalytix. Of course, I love the traffic light page for researching and intelligence gathering because, I could look at what Greg is doing. I could look at what Andre's seeing and Blake and Stelios on this page and get all the different time frames and look for confluence between the different methodologies. So if you had a good week in FACE, you skip the trial and just join, just join. Because I'll tell you something, you better put your seatbelt on because we're going to have those types of markets through the midterms. So, sometimes it takes just one good run to make your year. Okay, maybe it's going to be this correction in the NASDAQ to 5,900, could end up making my year. I was a little underwater on some ETFs I had. But I gutted it out, and you can't find an ETF that didn't really perform during this. This is a Russell bearish ETF. Nice, huh? Okay, this is a semiconductor. Another good one. And here I have all the gold charts. The golds came to life too. So this was the one I had. It went to targets without me because I got out early, when the NASDAQ was down 300. So I had an impulsive out. If you're ever going to be impulsive, it's probably better to be impulsive about taking profits. So we're coming down. This is the NASDAQ. So I think I'm going to have a chance to recommit down there. And just a great team. I'm not being, if I didn't work here, I would say the same thing. Okay, if I didn't work here in FACE, I'd be here. because of what I've learned from everybody. I've become a better trader since coming here to work at ForexAnalytix. And, you know, I wasn't bad before this, but these guys have fine-tuned me. They're providing great background for me to make my decisions. And I would miss not having this, wouldn't you? Jacques agrees with me, you know. So if Face is working for you and it's free, just imagine if you had access to everything else besides an hour of analysis and then a half-hour interview. So I like Fridays for join up days because you have the weekend to prep. You know, most of the things that happened this week, I prepped on Saturday for it. So I knew what I was going to do this week. And maybe this weekend you turn over a new leaf and you add us to your arsenal of intelligence gathering for trading during this historic period. So I think it is historic what's going on here. And oh, we're going to have Trent with us today. So write down your questions, anything about FX brokerage, you know, spreads, maybe have you're trading a few accounts. I know a lot of people are entrepreneurial in here. They do more than trade their own account. They might be trading a few friends or people. You know, maybe there's a better way for you to go like ma'am or Pam, so you don't have to hit the button for each individual account. If you have an IB, that's something else that, you know, maybe you're not getting the best clearing rate with your IB. So that's something else that Trent could help you with. So I don't know about you guys. I'm glad it's Friday. You know, I don't look to do anything here. You know, my week is made, and I'm probably just going to be a spectator today rather than a speculator. But I've said that a million times, and then all of a sudden I'm clicking the button. But I think a lot of real nice things are setting up for next week. And want to thank all you subscribers for your loyalty and supporting our efforts. We all work really hard, okay? A lot of hours trying to give you our best stuff all the time. And I really believe it. It's the best FX site on the net. And Face is the best FX webinar on the net. You know, I've pushed these guys to make it a paid webinar, okay, because I think it has a lot of value. But Blake's such a humanitarian that, you know, he just wants to be here for you guys, okay? You know, he wants you guys to know you have a place to come, whether you subscribe or not. So that's the kind of people I work with. And that's it for me this week. Stick around for Trent. He'll be here in the last 30 minutes at the top of the hour. And think about it, guys. Any questions you have about the inner workings of an FX broker, how they may be getting an edge on you, and what may be a better solution for you, because, you know, it's enough just battling the markets. You don't want to battle with your broker. So you need to find a home you're comfortable with, just like a home here with ForexAnalytix. You feel at home. So interested to see what the team has to say with weekend. You know, look at your weekly candles, a nice reversal up in Euro, a nice reversal week. So, you know, the key is there follow through, but on the weekend, just a hint, you know, look at your weekly candles. And this was a decent reversal week. You know, it doesn't mean it can't be negated. So, you know, I see a couple scenarios. Either we get this from here that could take us up to 119. Wouldn't change this slanted head and shoulders that Greg is talking about. So it would actually, you know, give it a little bit more symmetry to rally one more time for the right shoulder. But, you know, he has big objectives down here. but I'd look for at least a quality, and from 119 it's 106, or maybe you take 61.8 of this from wherever we top. That would be about 8. That takes you down to 110 or so. But anyway, hope you had a great week. Our mission is to build up and edify traders every day. So I'm going to turn it over to Blake, who does that every day he's here for 15, 20 minutes before he gets into the trading mode. How are you today, partner?
I'm good, Dale. How are you?
Good, buddy.
I'm
Glad
happy
it's Friday.
Yeah, me too.
Oh, Jinx, you owe me a Coke.
Yeah, I really am happy that it's Friday. It's been one of those. Oh shoot, did I put it on the wrong screen? Dang it.
Well, yeah, you have the members chat.
There you go. Okay, so this is the chart that I wanted to show you guys. Sorry, that was not intentional.
Nice trend line.
Yeah, this is the Nasdaq, and this is the composite. So I kind of want to talk about you were mentioning weekly charts, and this is what a weekly candle looks like in the Nasdaq. Well, at least right now, we're going to open up probably about 100, at least 100 and 100 points higher. I mean, the Nasdaq composite right now is this is via Bloomberg here. You can see futures right now are up 113 points. So yeah, we're going to open up about 100 points higher. So the thing is, we're going to open up near the 200-day moving average, which the 200-day moving average comes in at around 75.01. And I expect that that's going to offer some sort of resistance today. The fact of the matter is that these are pretty ugly weekly candles. And
yeah, you know what, Blake? The candle this week was ugly, but the tip-off was the week before candle. I mean, right out of a textbook, a key reversal.
Bearish engulfing. Yeah, it really really is and was key. And I look at the markets right now, and I have to think that you if you're a portfolio manager, you're on the defensive. You're thinking, okay, I might have gone negative for the year, it may be slightly positive, and I can't take that type of move much longer. So you've got to be on the defensive. And yesterday, the market was saved at the end of the day, or the last a couple hours of the session, when the announcement came that the U.S. is going to talk to China in November. But and honestly, if things get patched up, or if that trade talks go well, it could really change the dynamic of the market. I mean, you can see the market really probably even realistically go to new highs. But the tariffs and I don't think the trade war is going to be won or given up that easily. I don't think either administration is going to want to succumb to the other. So you have to be a little cautious here. And I know stocks and sentiment are relatively buoyant right now, but I don't know how the markets are going to close today. And I think price action is going to be pretty key. And like you, I was long Aussie yen overnight. I took that off the table, not too far from where we're at, like, just about 98, I think, is where I sold it. So 98 last night, like before I went to bed, I sold it like right around here. Actually, I know I sold it right at this trend line, because we were right at this downtrend line. And then as soon as I sold it, I mean, the thing was up like another 4 or 5 pips. I'm like, damn it. And then I'm like, you know what? I'm going to bed anyway. I'll chalk it up as successful. And I went to bed, and I got up this morning, and we were actually lower than where I got out, but it's bounced since then. But what I'm trying to say here is that I'm done. I'm finished. Not in the markets right now. I'm flat. But I'm really interested to see how Friday shakes out, and I'm not too interested in establishing new positions right now, because it has been a hell of a week, as you pointed out. I mean, it has been one hell of a week from a volatility standpoint, and I'm not sure if the volatility is going to increase, or we're going to just see maybe the markets kind of slump as we go into, let me rephrase that. The markets are going to kind of consolidate going into the weekend, which probably is the more realistic expectation. Now, as far as what to do in the FX market, I'm looking around and it's actually pretty quiet. You look at the euro dollar, and I'm going to point out just a couple key developments that I've seen. First of all, the euro, we punctured this high here. You can see that right there, enough to squeeze the market, and then we've kind of rolled over. We're in between fibs, so we're in between the 38%, the 50% retracement, so nothing really too significant there as far as the euro goes. But the pound stalled at the 88% retracement, and the pound is a little weaker at the moment. I've really stayed clear of the cable over the last week. I haven't touched it at all. Actually, I don't think I've traded the pound at all. For me, it's more of a frustrating currency to trade just in general, but I've kind of left it alone this week. But we did reject at the 88% retracement. The on the hourlies and even the 4-hour, the relative strength has been divergent. So what I do think is if we break above these highs, which is the 38% retracement, we are going much higher. But the pound is probably going to be a victim of more headline trading than anything, and so I'm just kind of standing aside while everybody's expecting the Brexit negotiations to continue to go well, and eventually some sort of Brexit deal is going to be put together. But again, I'm kind of leaving the pound alone right now. The Aussie is struggling here at the previous resistance zone and this 7150. 7150 is a bit of a struggle here for the Aussie, and I'm actually quite surprised the Aussie isn't stronger than it is. But you can see it bounced yesterday pretty aggressively following the news that the U.S. was going to talk with China in November, and that I'm just surprised we aren't trading higher. And because we're not trading higher, that leads me to believe that the market's probably a little skeptical that any meaningful talks are going to get done. And frankly, the Aussie's in a pretty steep downtrend. We are making lower highs and lower lows. I mean, this is a lower low, this is a lower high, and can we bounce up to 72 cents? Sure. I thought we'd already be up there. Actually, I thought I'd get up this morning. We were going to be trading at 82 cents. We're not, though. And I think a lot of that comes from the market just a little skeptical about trying to be too aggressively long risk. If I could go back and reference, those longer term charts like the S&P or the NASDAQ, I think the market's probably looking at those charts saying, I don't really want to be too long risk going into this weekend. The Kiwi, now the Kiwi is going to be actually a pretty interesting chart, because if you look at the weekly chart, we had a breakdown last week, and this week we have possibly a false breakdown. So, if the Kiwi rejects this previous support, which is acting as current resistance, 38% retracement, and we trade back below 64 cents, which you can see above 65 cents. We're currently at 65.15, but if we close the week, and I'm just going to draw this out for you, if we close the week like down here, okay, that will close in breakdown territory. So if you were thinking there was going to be a false breakdown, it's not going to be. So I think the Kiwi is going to be really interesting going into today. And again, like the Aussie and probably everything else in the FX market, what you're seeing here is more of a result of risk appetite and risk aversion versus anything else. So if we have the market, get a little wobbly going into the end of today, that could lean on the Kiwi a little bit as well. One of the trades that actually took my money yesterday was the US dollar Canadian. I went long the US dollar Canadian on a breakout above the 130.15 level, this breakout area right here. And I was so frustrated because I was up really good money as we were looking like we were going to surge to new highs. And as soon as that announcement came out about China, the Canadian reversed, and I actually ended up, because of all my additions, I didn't just buy it here. I bought here, I added a little bit up here. So by the time it got me out yesterday, I lost money in the trade, slightly. It was more of a break even, but regardless, I was so frustrated because it really, you have to imagine this candle right here at one point was bright green and straight up and breaking out, and then it kind of, you know, fell back a little bit. We were sitting here around 130.60, and then all of a sudden that news story about US and China came out, and then it slumped, and I'm like, it's so frustrating. Just, you know, very, very frustrating trade on my behalf. Now, as far as the dollar index goes, there are people, and I keep seeing people saying, you know, the dollar index is going to 92.5, or the dollar index is going to 100. And frankly, I look at the dollar and I can't make heads or tails of it. I mean, I look at that, and if you can find something to do and a direction here, more power to you, because I don't see it. I look at it and I'm very much unbiased with the dollar at the moment. I could see it going higher, I could see it going lower, I could argue both arguments, and frankly, I don't know what to do with it. And it's okay. It's okay to be in a situation where you don't know what to do with a pair, and because that's honestly how I feel at this moment in time. And you know, I'm gonna reference just one last pair, which is the US dollar Japanese yen, and then I wanted to bring on Paul Franco here in just a minute, so just bear with me. The US dollar Japanese yen has really reversed from, in my opinion, a key like resistance level. This is a huge resistance that we ran up to. Big resistance zone. I've had this red zone marked up on the US dollar Japanese yen for literally months, and we ran up to it and then we rejected it. And the problem with that is it squeezed out a lot of shorts, especially when we got above that 113.25. And obviously this week we slumped back below this. I'm not so concerned with the US dollar Japanese yen today. I'm going to be looking forward into next week. And what I'm most concerned with is this trend line right here, which comes in around 111, let's just call it 111.60, which is also the 618 retracement right at this point in time. I'm sorry, not right at this point in time. The 618 retracement of this up move that you saw for the last couple of months, it comes in right at the same trend line. That's
also where it broke up, like around the 117 level on its way up. So that's a real important pivot, plus your trend line there.
Yeah, and I think it's going to be important, not so much today, but going into next week. And
maybe we could get a rally back to your blue line, the horizontal one.
Well, maybe, and I think that, you know, you can see, you know, futures are up this morning, and that's keeping the US dollar Japanese yen higher. But what I'm most concerned with right now is if this dollar yen breaks below this trend line,
yeah,
that's going to signal to me that that risk appetite is really waning. And if equities haven't dropped and the dollar yen is breaking, then I'm going to make the assumption that the S&P and the NASDAQ and all the other markets are going to come under pressure. So this means a lot more to me than just trading FX. This means more to me about risk appetite and risk aversion. So I'm going to be really keen on this trend line right here. Now, Chi said also the weekly trend line. You know, this is the longer term trend line that I'm looking at, that I'm really more concerned with, you know, in the event that we fall, but that doesn't come in until about 110. So I'm more and maybe I think what she is probably mentioning and referencing is something that looks like this, something that looks like that. And you know, I don't know. I'm more like I said, I'm more inclined right now to just really focusing on this upward sloping trend line that we're seeing here. And as long as that holds, I think the stock market's okay. If that breaks, I think the things are going to change quite a bit. And by the way, I don't think we had any data come out. We do have consumer confidence a little bit later this morning. Oh, we had import prices that just were released, but I don't think it's not moving the needle at all. I didn't expect it to anyway. Import prices are moving up a little bit. But consumer confidence is going to be, if there's going to be any data that's going to move the needle, it's inflation and consumer confidence a little bit later. But I wanted to bring on really quick before Steve and Stelios come on, I want to bring on Paul Franco and see if he's here. Let's see if I can unmute him. I can't unmute him.
He can unmute himself, Blake. He's in the organizers.
Let me see if he can unmute himself.
Paulie, they took my thumbs.
Paulie is in the house. Good morning, Paul Franco and Steve.
Hey, how you doing?
Good.
Morning.
So, hey, Paul. I was, first and foremost, if you guys don't listen to Paul in the morning, if you're a ForexAnalytix subscriber, you can listen to the European crossover in the morning, and I listen to it every morning. I listened to it this morning, even though I signed off about 5 minutes before you ended, because I wanted to send out a couple of charts. But I always listen to Paul in the morning to get a feel, because for me, he starts broadcasting just after I've got my cup of coffee. So it's good. For me, it's a great way to get started in the morning and get a good overview of the markets. And today, I mean, I asked you to come on because it's a little blasé day in the markets. There's not a whole lot going on. The FX market's actually really quite subdued at the moment. But is there anything, Paulie, that you saw this morning that you were like, that caught your eye, that really caught your eye? Oh, and one thing that I guess I should mention is I missed my gold buy overnight. I was actually going to buy gold as it dipped back down to 12.15, because if you read this analysis on gold overnight, and I'm such a dummy that I didn't put in an order, but if you see gold on the basic technical analysis, gold broke higher, now dipped to the 12.15 level, should be very well supported for the bulls near-term target, the 12.36 level. We went to 12.15.70, so I missed that like a bozo. So anyway, Paul, going back to my question to you, what do you see out there? Anything in particular that really caught your eye overnight?
The only thing we're seeing right now is we are seeing some headlines coming out about the cable, and as far as the Irish minister saying that he, says I think the optimism wave we have read about in the newspaper in recent days is probably not well founded. So we're seeing the cable just pare back a little bit here, but one of the things on cable I always notice is it loves that 78%. We got there, and we actually continue to work hard, so I think any dips down here, and we have that key support there, not key support, but it's one of our support levels, 3183. I think they'll use that as an opportunity for some shorts to probably cover up, because the news has been, the market has responded so well to news. But as you said, it's fairly quiet. I think that the cash dollar index probably has a chance to make it up to about 95.32. That's that big area that we have that it's been rejected previously before we broke out. So maybe we actually have our intraday bias chart resistance at 95.37. So we may be able to push a little bit higher. And you mentioned also in the euro, that was my target for the analysis for the last few days, because we've been talking about that. We're looking for the euro to break out. And the target I had was at 16.24, that 50%. We almost made it there, and the market started to rotate back. But as you indicated, everything's fairly quiet. I was working a bit yesterday in the Asian session at 12.19, and the market, I think it made about to 12.20 and change, just under 21. It popped back out, and I canceled, and then I saw overnight that it dipped down to, I think it was 19.20, which was that breakout area that we had. So we both missed the chance to get back into gold. I had actually got long when the market was coming apart. Was it day before yesterday in the close, and I spun out too early in the European session. I was pretty happy when I saw the 1206, and on the way up, I tried to see if I could take the other side, but gold kept pushing a little bit higher. But certainly a pretty decent pullback from that 1228 area. That was our next key area, and that slid down into Asia. But I think gold is going to make a run. Now that we've got the daily close above 1219 from yesterday, we should be able to make a run for 1248, and 1245 is going to be the 38% of this whole area from, I think it's 1167 to 1369, I believe it is. So, but I think we'll resolve ourselves. But I think you're right. In the equities, I think it's going to be kind of quiet. A lot of people are kind of paring back, but I think, as Dale mentioned, I think we got some good setups that are coming to next week. I still think that the dollar will pull back. And as we were talking about yesterday in the analysis, and that's why we saw the euro continue to move higher, is I thought that the dollar behaved abysmally when the equity markets were coming apart. You would have thought the dollar would have made a run towards 97. And while the S&Ps were just coming apart at the seams, all the dollar was doing was treading water. It didn't even rally. It didn't even gain anything, and hence why I thought the euro would continue that move, which we did see yesterday. But I think the dollar will make a move up towards about maybe 95.32, 37, and then I think eventually we'll make a move next week, going towards 94.68-ish.
Well, the dollar's getting a little bit of lift right now, just because the Fed has Fed Evans, he was talking about not worrying about inflation, but also more importantly, he said he's time to adjust policy to stance at least to neutral, and that has firmed up the dollar just a little bit on those comments from Evans. Sorry, Steve, go ahead.
No problem. I just wanted to comment on what Paulie said. I mean, this is something that I bet almost nobody expected. We had concurrent sell-off in the stock market, in the bonds, and in the dollar, right? That's not a very typical behavior. Mm-hmm. And, he very correctly acknowledged that. And I think that this is something we should monitor closely. If it was like a one-off event, or, it indicates some kind of a change in market behavior having to do with confidence in the U.S. Economy and the U.S. construct in general. But it is something that for me it's extremely interesting, and I want to see if we get, or when we get, because I do believe that this kind of a sell-off like the one we had is going to have some kind of a follow-through. Even if we rebound first, I think we should see more weakness, at least in the short to medium term. I'm really eager to see if we're going to see the same kind of behavior. I mean, bonds and dollars selling off once again with U.S. stocks.
Yeah, and it's hard to judge what the correlations are going to be, because right now the markets are kind of reasserting themselves, and I think trying to, everybody's asking the same question. Did the S&P put in a high? Did we put in a tradable high? If so, and the market starts keying off of the resistance in the S&P, and understanding that we might see more of two-way price action, then I think correlations will come back into play. And I think it's going to, in order for the markets to correlate, it's probably going to take another week or two for the market to really decide, the participants to decide which way that they're going to trade the markets. One thing, as far as from a correlation standpoint, one thing I do think has put in a bottom in gold is, or one of the things that has put in a bottom in gold is the fact that the S&P may have peaked, and so now gold should be very well supported, and I think that that you're gonna find buyers on dips now, and like the dollar yen below the 111.60, I think if gold comes back above 1260, which is this previous broken trend line here, if we take out 1240, then 1260, that's going to really cement the idea that highs have been put in the equity market. in the equity markets. But hey, Paul, I just wanted to say you've been a great asset to the team. It's really nice to have you here in the mornings, especially for our ForexAnalytix community. And just remember, if you are a ForexAnalytix subscriber, you can see where it says webinars on air, click to join. That will be lit up.
Now it says face, but during the time of Paul's webinar, it says the European crossover. For the time being, if they click there, they will only receive a message that says that their link is being sent via email. But if for some reason they haven't received the email, they can click on the intercom button on the bottom right. You can show that, Blake, as we're speaking, and you can ask for one of our representatives to send you your unique link. But from next week, we're working so the unique link of each subscriber is going to be in the join button up there, so they won't even, if they don't receive the email for some reason, unfortunately, we're not sending those emails. Those are being sent by GoToWebinar, and sometimes they get, they get sent to the spam folder or to advertisement folder, depending on what kind of, mail service they're using. But from the next week, we'll also make sure to integrate it in the join button, so all ForexAnalytix subscribers can participate and join and ask questions and whatever else to Paul's webinar.
Great. And Paul, I just want to say it's great having you, and I know it's great for other traders to be able to get prepared with you in the morning, especially as you build the bias chart for the traders and show everybody what the key support and resistance levels are throughout the course of the session. So thanks for joining in.
Yeah, and I will say I've been glad to be part of the team, but it's a great community in the chat service. You really, you got traders focusing from, well, me, I primarily focus on day trading. I did actually held the dollar CAD for, I think it was two days or whatever I spun out of this morning. That turned out well, that's something big for me to hang on to a trade. But you got all dimensions of traders. A lot of traders, some that hold for a lot longer length, some that are trading back and forth, in and out. So you got, like I said, you got a good, well-rounded community of different traders. Everybody shares their ideas, very supportive. So and Blake's there all the time. So I'm telling you, and Amanda is excellent, and she's our CAD queen, and Amanda is our cable queen. But it's a great community. I think people should go in and try it out, because just the chat service in itself is great. And we're there all the time. I spend a lot of time in the Asian session. I come in during the late European into the U.S., but we've got traders in that chat room throughout the entire day. But it's great being a part of the team, and y'all have a great weekend.
All right, thanks, Paul.
Paulie, ForexAnalytix keeps getting better and better. And what a great addition you are to make it better still. So, it's amazing to me, the team that the owners of this company have put together. I've never been a part of more talented group in my career, and people that know me know it hasn't been a short career.
Anyway, all right, Dale. Well, hey, I'm gonna pass things over to my colleague Steve. So, Steve, it's coming over to you, and I want to say TGIF, everybody, and enjoy the interview today with Trent, because if you guys, the Trent and the Forest Park FX group, they are our webinar sponsors, but I mean, you want to talk about somebody who's got a lot of knowledge about different brokers in the industry. This is the time where you need to ask, because we have him here for half an hour today, and awesome. And if you guys are not getting ForexAnalytix for free through our reimbursement program, or you're not getting cash back on your trades if you're in the United States, you need to chat with them, and he'll be on, and you'll see what kind of character, and just by hearing them, exactly who they are. And they're just they're great people, because they have the same mission that we do. We just want you guys to be successful and continue on trading in the markets, and one of the ways to achieve that is having a broker that suits your specific needs. So, all right, guys, thanks everybody. Steve, have a great one. Dale, thank you as always.
Thanks,
And you guys have a
great weekend, Blake.
All right, thanks. You too.
Steve,
Okay,
so I imagined you after I saw the gold explosion yesterday,
finally,
rolling around in a pile of euros, and laughing and throwing them up. You and Jason throwing all the euros up in the air and just having fun in a pile of money.
Actually, after a month, that was very sterile for me because, as you know, I'm never the one to jump into trading things when I don't feel comfortable about it. I had that little attempt in the euro pound because of the amazing reward to risk ratio, which didn't work. Right. But gold finally worked. I yesterday booked 1/3 of my position long, as I wrote in the chat room as well. So I'm still holding the other 2/3 because I do believe that we're going to eventually see at least 1238. If you remember, that was my initial plan, having to do with gold. And most importantly, I made a killing with that short I had in the SPX because I booked like 6.3% profit, which I waited and waited. So but this is my tactic. I mean, I prefer to wait, and sometimes you need to be very patient and sit on your hands, but it's been serving me well, so I have no reason to change what I'm doing the way I'm doing.
Oh, come on, it was lucky, admit it.
It needs luck as well, yeah, but
lucky trader, you.
Over time, over time, it's the theory of big numbers. Over time, luck plays no role. I mean, in the short term, when you have a small sample of trades, luck might be very important. But once you've traded like 1,000 trades, the bad luck and the good luck even out each other. You understand what I mean?
All right. Well, then you're lucky to know how to trade.
I really believe it. I really believe it that everybody can be successful in trading, but the first element they need to have is patience and to
wait for confirmations
and to wait and give it enough time so intuitively they can start reading, learn how to read price action, and they can start getting the vibe and the feel of the markets. And then one by one, the building blocks are going to go in place. You need to have a system. Once you develop a system and you stick with it, you will get there. You will get there. And what we're trying to achieve with ForexAnalytix is help and empower people to do exactly that. But anyhow, this was not meant to be like an advertisement. So having to do with gold, since you mentioned it, and then I'm going to go to oil because we had a question. I think that now that we got this confirmation, this daily close above 1208, we should get ourselves up to 1238 at least. Blake mentioned, and I very much agree with him, that very critical is going to be the confluence. If I extend this trend line, if I zoom out, you can see how important this trend line is. Yeah. We have a triple confluence of resistances roughly at 1260. It's the 50% fib of this move lower. It's a horizontal support resistance zone. It's also this broken trend line. So yeah, we can even make it up to 1260. That is why I have an order to take profits on another third of my long position at 1238, but I'm still going to keep some of it, 1/3, even if we get there, because there is the chance that we're going to squeeze even higher from there. Okay. So I totally agree with what Blake said. Blake had a question of what he thinks about crude, but he didn't have enough time to stick with us, so I will be more than happy to cover that. I was expecting one more move lower for crude. I thought that the first area of support should be 72.50, but if we did make it below that, the 70 area, it was one of interest, and we did hit the 70 area. Not only that, we also retested like this inverted head and shoulders formation neckline. So, quite an interesting area to find support here. Let's see if this is going to hold. Obviously, I wouldn't be selling crude right on this level. I maintain the opinion that in the medium to long term, the trend remains higher. We should not discount the fact that since February 2016, so we're talking about already, full 2.5 years, crude has been posting higher lows and higher highs. So, this is a decent trend, and we should respect it until proven otherwise. Obviously, the upside momentum has somewhat stalled, but that is not enough of an evidence to start looking for shorts in the medium to long term. So if you want to be short, for example, if you believe there is more downside to this correction, I would be looking for 72.50 as a decent level to try to short for another leg lower. But as I said, you have to be cognitive of the fact that technically speaking, there is still no real damage done to the uptrend. Okay, so this is what I think about crude. Now, having to do with cable, and I wanted to mention cable because I was very clear with the fact that, in my opinion, anything that happens between 130 and 133 is simply noise. The fact that we're getting rejected once again, just before we reach this general zone of 133, shows that today it's quite a bearish day. This is an outside black candle on the daily chart that we're seeing so far. I would be quite skeptical with being long unless we break above 133. And obviously, the closer you go to 133, the more the risk reward benefits or anyhow favors attempts to look for a leg lower than anything else, right? So this could have easily been a correction that's already over. We don't have enough evidence to think so, but what we do know for sure is that the move lower from the almost 144 area that we hit and this double top produced a move that looks impulsive. So the first response to that is that you should be looking at rebounds, and especially rebounds like this one, which definitely hasn't developed like a strong impulsive move, but more like a corrective move. You should be more suspicious of this kind of a move to end up being corrective than anything else, right? So, the burden of evidence is for the bulls, not for the bears in this case. So, that's what I wanted to mention here. So, other than that, not much has changed since yesterday. Obviously, and it's very important, yesterday we retested this support resistance area at the S&P, the 2790. I said that this is the first area of support that we've broken that now can end up acting as resistance. And that's exactly what happened yesterday. We retested so far this area today. So keep in mind, this area can now start proving very hard to crack to the upside, while it did the same in the past until we managed to finally break through it. So definitely this is an area that the bulls have to break through before they can open some more upside. And I do believe that in the short term, you should definitely be looking for rallies to sell, even if the bullish trend is not broken, not yet at least. I mean, this can easily end up being another corrective move, but this kind of candlestick like the one we had, combined with this kind of volume that you see here, will definitely have people being quite scared, which means that any decent rally is going to be a relief opportunity for people that got trapped being long very late in the rally, or people that were long since lower levels and they think that now this is a good chance to book some profits and wait for more confirmation of this being a correction before recommitting to the long side. So for one thing, I'm certain that after this kind of a move, you shouldn't expect that the index can actually be trading, let's say, to new highs within a couple of weeks for today. There's going to be, at the very least, under the most bullish case scenario, there's going to be a lot of chopping around before seeing a move higher. But of course, there is always the scenario that this is the beginning of something bigger. So in any case, in the short term, any rallies, first area 2790, next area the retest of this broken channel, they should be considered as good selling opportunities. In between 2815 is also a level of interest. So 2790, 2815, and above that 2845. So that's my opinion having to do with stocks. And no matter which one you look at, for example, the Nasdaq is about to retest now this horizontal level of support resistance. So it wouldn't surprise me if we see a rejection from there. Now, if we manage to break through that level, I would then be looking for 2350, 2360 to do the same thing. But by far the most bearish one is the IWM, not only because it got rejected just before reaching a very nice confluence of resistances, but because it's now breaking down. It has already broken down, actually. Yesterday it closed, comfortably below it, below this ascending channel, which was forming since the very beginning of 2016. So, and just look at the RSI. RSI, first of all, there was a clear RSI divergence at the highs. You can see it here. And now just look at the RSI. The RSI has hit 16. These are levels that you don't expect to see in a simple corrective move. You don't expect the daily RSI to hit 16 and then the index like to recover and just push to new highs. So in my opinion, the index that has definitely suffered the most important technical damage is the IWM. 160.40 is definitely going to be a very hard level to crack to the upside now that we finally broke below it. And this move looks clearly impulsive. Just look at the momentum of this move, right? I mean, let's say from this candle here to where we are, the index has already lost like 9.4% within 8 trading days. That's amazing. So, IWM 100% a sell on any rebound towards 160.40 or perhaps even to 158, which is going to be the retest of this broken ascending trend line. So perhaps this is the first index that really cracks the uptrend. Now, having to do with the DAX did close below 11,800. It has already triggered the huge head and shoulders formation scenario. We've been talking about that for a long time, and 11,800 should be a very, very tough resistance to crack from this point on, as long as we trade, and especially if we close the week, which now looks like a very likely scenario, below 11,800. I think there's going to be a lot of pondering and a lot of thinking during the weekend among fund managers and funds, because really I wouldn't want to be long the DAX after seeing this head and shoulders formation getting triggered. So 11,800, I will be selling that in case we retest it immediately. No questions asked. It works or doesn't work, it's from a technical perspective, it's the right approach, and that's all I care about. Let me see if we have any new questions. Aussie yen and Kiwi yen, I'm going to answer that, and then I'm going to pass it to Trent. And stick around, because I'm sure that a lot of you don't understand a lot of things on how that have to do with how the brokers are working, and your options and your opportunities, and how you can take advantage. Different brokers depending on your trading style, and Trent is the person to answer those questions. Now, having to do with the Aussie and the Kiwi yen, I have 2 comments to make. First of all, the Aussie yen from a technical perspective looks not clean. So between the two of them, I would not lose any time trying to trade the Aussie yen, and I would focus mostly on the Kiwi yen. Why? Because the Kiwi yen so far has found support for a 3rd time on the same horizontal support area here at 72.30. 72.30, 72.40, 72.50. It's a little, zone of like 20, 30 pips. So, very simply put, you like it to the long side. You are very lucky because you have an extremely clearly defined, risk-reward opportunity. Now, on the other hand, it remains within an also clearly defined descending channel. And as long as that's the case, you can't make a real argument that the downtrend is over, right? So, for me to start looking higher in the queue again, I would definitely need to see a break above this descending channel. Until that happens, the only, technical structure of interest, as I said, is this early potential of a triple bottom. Generally, triple bottoms are very rare events, so I wouldn't be holding my breath for one. But, so far, that was a nice reaction from this area that, produced this previous double bottom. So, why not? And as I said, Aussie yen, much harder to read. So if you want to do something with one of the two of them, just stick with the Kiwi yen. So thank you all, for a nice, interesting week. I think that, by the end of the year, things are going to pick up in volatility in general. If you remember, I was warning about that since September, that I believe that soon we should start having more interesting days. You know where to find us. We're going to be in the chat room. We're sending updates all day long. We have a team of almost 10 people now working for you every day. And, we also have associates like Trent that he's going to help you with things that have to do with your brokers now. So thank you very much for being with us. Thank you, Dale, and welcome, Trent.
You're welcome, Steve. Congratulations. Have a great weekend. You too, Stel. Hi, Trent. I see you. And we're all looking forward to being able to pick your brain today. So I just passed you over the controls, buddy.
Hey,
Trent
Dale.
Orr. Hi, Trent. How are you, buddy?
Good. Can you hear me?
Can hear you, can see you have the reimbursement program page up from ForexAnalytix, and great to have you here, especially, when you get these volatile markets and you're, say, for example, an index trader, air pockets, my first question is to you. I'm not sure what you wanted to cover besides having this be question and answer period. Is, in your experience, do you have a handful of brokers that during times of extreme volatility have a track record for not gouging people on fills, and also have great execution under all market conditions?
Yeah, thanks for that, and thanks for having me back on. I think it's been exactly 1 year since the last time I was on the show. So
happy anniversary.
But yeah, to answer your question, at this day and age, with how competitive liquidity and pricing has become, most regulated and reputable brokers are going to be very similar in terms of, I guess, quality of execution and their pricing during extreme volatility. But with that being said, Forex is still an OTC, or over-the-counter product. So it's going to vary a little bit broker to broker, because they are using different LPs and different liquidity providers. But
okay.
the biggest thing to make sure is making sure you're just with a regulated and reputable broker.
Okay, so I asked the community to bring their questions. So go ahead, everyone. Start giving us some questions. Trent, are you familiar with NordFX, and what do you think of them?
I've heard the name. I am not that familiar with that broker, so I wouldn't really want to comment one way or the other.
Okay.
So unfortunately, if that person wants to ping me separately, I can do a bit of research on my end, and we can have a follow-up conversation.
Okay. How many? Rob is asking, how many options do U.S. traders actually have? What is it? 3?
Currently, that's correct. There's 3. There's a 4th player coming in. So right now, there's really 2 that focus on Forex, Oanda, and Gain Capital or Forex.com. There's a third option that doesn't really focus that much. It's sort of an afterthought. And I've actually had conversations with them. They were going to drop it a few years back before FXCM went out of business, and they decided to just hang on to it. But TD Ameritrade also offers it.
Okay.
But one thing to keep in mind about them is they use Gain Capital as their sole liquidity provider. So effectively, they just STP all the trades to Gain, and they're the ones taking the other side of the trade. There's a fourth player that has filed their paperwork, but who knows if they're going to come or when they're going to come. But IG has filed the paperwork as of last November. So cross your fingers that there's going to be another good option.
Yeah, they're very good. Eric would like to know, is 50-to-1 leverage coming to Australia anytime soon?
We haven't heard anything, so we're pretty tied in with brokers down there and how the regulation that's coming through the pipeline. We have not heard that. The biggest thing that Australia focused on this past year was safety of client funds. So one thing they implemented back in January, and it took effect, I believe, in April, was brokers can no longer use client deposits for margin purposes with their liquidity providers. So prior to January or April of this year, a broker used to be able to take up to 50% of a client deposit and send it to their liquidity providers to basically execute the trades. They took that back, and now the broker has to use their own operating capital to post margins with the LPs. So the biggest thing they're focused on right now is just safety of client funds.
Okay, I have a question. You know, a lot of our community members are pretty entrepreneurial, and they probably, some of them trade more than their own account. They may trade family accounts, so they have, maybe multiple accounts. So is there a solution so that you would have so they could just press one button instead of having to go to each individual account to execute trades?
So it depends on the broker. Some brokers offer the multi-terminal through MetaTrader. So it's a pretty cool platform if your broker offers it. I know like FX Pro offers it. I believe Oanda has it as well, where you can basically log into, I don't know the exact number of accounts. It's 50 or 100. It's a lot. You can log into multiple accounts at the same time and execute across all of those accounts at the same time. So if you want to place a one lot trade across 4 different accounts, you can click the button and it'll place the trade across those 4 accounts. So instead of having to log in and out of accounts separately and place the trade, you can just do it from there. There's also sort of a hack on MT4 where you can log into multiple instances of MT4 at the same time. If you have 4 accounts at Oanda, you can have 4 Oanda MT4 platforms pulled up.
Interesting.
Which it's pretty simple. I guess I can just walk through it for those people that are watching. You just pull up your file explorer and you go, typically it's in your C drive x86 program files. I get this question all the time, so it's probably good just to go over it. Okay, and then you find your broker that you're trading with. So for example, if I'm trading with Oanda, I would just come and I would open my Oanda folder and I would press Control A as in alpha and Control C as in car. And then what you're doing is you're just copying all these files. And then you go back and then you right click and you go to new folder. You can just do Oanda 2. And then just open that up and paste all those files in there. And once it pastes, you can open up 2 Oanda MT4 platforms at the exact same time. So just to put in perspective, if I can do it here real quick. So here in a second, both of those platforms will open up and I can log into 2 separate accounts. So this helps you avoid having to log in and out of accounts. You can just have them both pulled up. Some people just split it in half. When this really comes into play is if you're running multiple EAs. So say you have 2 EAs, like one might be a scalping strategy and one might be a more longer term position style strategy. You can run both of those on the same platform or the same MT4 computer at the same time.
Wow, that's a pearl. Thank you for that tutorial. I have a question from Eric, and Nick's is pretty similar. From Nick and BR. Do you work with or plan to work with interactive brokers in Europe? And what's your view on interactive brokers?
Yeah, so I think they're a good broker, certainly, and we've definitely tried to work with them in the past. The issue with them is that in order to work together, they require the introducing broker to mark up the spreads, which goes completely against our model. We're trying to lower the cost of traders, not increase the cost. So if they would ever drop that theory and pay us from their marketing budget, we would definitely consider working with them.
Do you have a reimbursement program? Leon would like to know for the broker active trades. Also, do you have any experience or opinion on them? If not, thank you.
We currently do not work with them. My understanding is they're not really working with introducing brokers that much anymore, just due to some of the MiFID II new ESMA regulations coming out. So unfortunately, I don't think that'll be in the pipelines.
Okay, and what about Ally Invest? Or he has Invest, I think that's a typo. I am in USA. Oanda used to allow trading in gold and silver in the US. With the deregulation occurring, will that come back?
So the first one, so Ally is an introducing broker to Gain Capital. So Gain holds your funds, they hold your account. They act in a very similar capacity to Forest Park FX here in the States. Yes, there's been some talks about the Dodd-Frank Act getting repealed. Unfortunately, I don't think it will trickle down to us as retail FX traders. It's more for banking regulations than anything else. So unless there's a specific clause where they free up margin or free up the ability for clients to go offshore, unless they specifically state it in there, I don't think there'll be much of an impact on the current conditions and products available.
Okay. Any other questions for Trent? I think the people that had things to ask you, you've answered a lot of questions. Okay.
I know there's. Oh, go ahead.
Go ahead.
I was going to say, I know there's one thing that we were talking about the other day that had come up previously for you is why somebody would have multiple different accounts.
At different brokers?
Yeah, whether it's at different brokers or if it's at the same broker. So if it's at the same broker, a lot of people will have different accounts for if they have different strategies. So a few moments ago, I mentioned if you have two different EAs, if you have one strategy that's more long-term, or if you have one strategy that's more position trading, you might have two accounts, just so those accounts don't interfere. So you can put, if you want to go and put your one trade on that's long Euro USD for the next month, or on a weekly chart, you can put that on, you can minimize it, and then you can go back over to your other account and continue to scalp throughout the day. We used to do a lot on the futures, the future style, because here in the US, it's FIFO, first in, first out, and that's how the futures market operated as well. So for example, I'll date myself a little bit. Back in 2010, 2011, when gold was really moving around, I wanted to be long gold, but I still scalped gold every single day. So I had two accounts. I went long gold in one of my accounts, just minimized that, got off my screen, and then I still was able to scalp without that position interfering with my overall position for the day. So that's definitely one way, or one reason why somebody would do it.
As you can tell, Trent is an expert in his field, and he really doesn't have any type of agenda except to help you find the best place and make sure that the markets are difficult enough. You don't need to have difficulty with your broker. So, Trent, is there anything else you want to cover, and maybe show people a good, how to get a hold of you personally?
Yeah, so I want to go, and I know Blake was touching on it, and Stelios was touching on it before I jumped on, but I really want to encourage everybody to take advantage of the reimbursement program. We've done a lot of work in implementing it and worked with ForexAnalytix for a long time. it's a pure value add program. So basically the way it works is if you have an account with us at one of the brokers that's in the list, and we work with some other ones as well. So if you don't see your broker, just send us an email. We'll take a look at it and see if that's a broker we work with that's just not listed for some reason, and see if we can't get your account moved underneath of our group. But the way it works is if you have an account underneath of our group, we effectively will credit your account $1 for every one standard lot you trade. So if say your subscription's $89, which I believe is the tier 1 cost, if it's $81 and you do 89 lots in a given month, you've effectively paid for your subscription that month simply by doing exactly what you otherwise would be doing, which is just trading. And it's prorated. So if you do $10, you'll get $10 in credits toward your subscription. There's no minimums. There's nothing. It's literally just found money. So I definitely encourage people to take advantage of that. You can just come to the ForexAnalytix website and just go to the reimbursement. It's right at the top. If you have questions or you don't see your broker, I'm on the Skype all day. Just click the button, open a Skype conversation, or just send an email to brokers@forexanalytix.com. Typically pretty quick to respond.
Yeah, I can attest to that. Brent, Trent is always there. If I send him a Skype message, I usually get responses almost immediately.
So yeah, I would definitely take advantage of it. Like I said, it's just pure value add. It's found money. It helps you pay for your subscription, which always benefits. A penny saved is a penny earned.
Okay, I a few more questions have rolled in. What do you think about plus 500?
It's funny. I got this question the other day from on another podcast. I think they're okay. They tend to be more of like a gaming style broker. That's generally who I see getting attracted to there. So people coming from the binary options community, people coming from like online poker, that tends to be who they're marketing towards.
Okay.
I don't really know that many serious traders that go trade there.
All right.
So it might be good if you're a new trader, but once you advance sort of past that new stage of trading, I would start looking for more, I guess, institutional broker or broker that focuses on Forex trading.
Okay. Is 100-to-1 leverage living on borrowed time offshore?
Is the person in the United States?
I don't know if Rob is from the U.S., but he wants to know if it's a borrowed time, the offshore 100-to-1 leverage.
So if he's in the United States, then yes, 100%. I would recommend him withdraw his money now. And the reason being is the CFTC has been going after these offshore unregulated brokers here recently. The two biggest examples in the past year have been Talinex and JAFX. And the issue when that happens is they come in and they freeze the bank accounts, and now all of a sudden he can't get his money out. And now his money is locked up in legal litigations.
Like a bail.
Sorry?
It's like a bail-in.
Yeah. And a good example, and these places might have good reviews right now, but a good example of that is go look at Forex Brokers Inc. So up until I think it's May or June of 2016, they had all 5-star reviews. They were great. They were wonderful. And then May of 2016, nobody could get their money out. And now all of a sudden, all their funds are locked up. So even though they have positive reviews right now, if and when the CFTC goes after them, the funds are going to be locked up, and there's just no reason to risk your capital. You work hard for your money.
Were they regulated?
No, they were not.
Okay, so then that's really the review, the most important review. Trade with a regulated broker. I'm getting a question from Craig Emmett. Can I link 2 ICM accounts to get a rebate? Example is one is an MT4 account and the other is a C trader.
Yeah, so you can get rebates on both of those accounts.
Okay, Craig.
I believe his account's underneath of us. Craig, send me an email separately, but I believe you're already a part of the program.
Okay. And on that 100-to-1, he was referring to non-U.S. traders because EU rules are changing on the 100-to-1 leverage.
So yeah, right now, it would depend where he's at. There's still some ASIC regulated brokers that work with European citizens. So IC Markets and Global Prime are two good examples where you still are afforded the regulatory oversight by ASIC, which is one of the stronger ones and throughout the industry that regulates Forex.
How about this, Trent? If they're domiciled in Belize, they're probably a sleaze.
That is a good way to think about it. I personally would never put my capital with a Belize regulated broker.
Okay.
I would never recommend any of our clients do it either.
All right, maybe a good place for vacation, but not for financial security of your funds. So
yeah, generally speaking, when you're talking about regulation, like FCA out of the UK, ASIC out of Australia, IROC out of Canada, NFA out of the United States, like these are the major jurisdictions. Once you start steering away from there, there's just not as much oversight, and they don't quite understand the industry as much as these other places do.
Well, I want to thank you for coming in today, Trent, and I want to thank you for being our sponsor. I hope it's working for you. We appreciate your support in FACE, and I encourage everyone hearing my voice and listen to Trent today. Even if you don't want to make any kind of immediate rash move, I've always believed in life, you make contacts and you get to know somebody sometimes before you really need them. And that way you have a go-to person if an issue ever pops up. So I'm encouraging everyone to call and introduce themselves and tell Trent their story about what they're doing. So thanks again, buddy. I hope you have a great weekend.
Yeah, thanks, Dale. Thanks for having me on. And like you just mentioned, yeah, feel free to contact me. So even if you're not a part of the program or we don't work together, we're always available to help and answer any questions, whether it's platform questions or broker questions. That's what we're here for. Utilize us. We're a free resource.
So if you can't see the forest park from the trees, give Trent a call and you'll see it clearly. And that's my new tagline for you, buddy. And have a great weekend, my trading warrior brother. And thank you, everyone in FACE, for your support. And great day to sign up. Great day to get a hold of Trent and make a change. I know I'm thinking of changing brokers. I am at TD Ameritrade. And you know what? We just get kind of just so comfortable that we put up with disadvantages. And change is good. So don't resist it. If you have a feeling that you need to do it, do it. You don't have to close the other account right away. But in racehorse, in that business, in the racing industry, you really never know if you have a good horse until you run it against another. So that's my recommendation, and Trent's the guy to steer you to an alternative. Okay, everyone. So have a great weekend. Enjoy college football, pro football. Don't forget to smell the roses, do your homework, have your plan for next week ready so that you're executing rather than analyzing on the fly. And most of all, don't just count your pips, count your blessings. What happened to the Peter Goodburn interview, Scott? Peter was here yesterday and it's on our YouTube channel. So everyone have a great weekend and we'll see you Monday. Adios, and thanks again, Trent.
Yeah, thanks, Dale. Thanks, guys.
All right, buddy. See ya.